welcome to Bloomberg Quint Live, and you're watching Trendspotting. I'm Shraddha Babla. Good morning, Agarwal.
Good morning, Shraddha. I'm Agarwal, and in the next 30 minutes, we deep dive into specific trends in the markets and draw key takeaways for and its implications for investors. And first, the headlines. The seventh straight day of gains for Indian equity markets, with the Nifty inching back above the mark of 10,500. All sectors barring FMCG gain. Broader markets inch higher as well. The government and the RBI lock horns over the new stressed assets rules, with Finance Ministry fearing it may have unintended consequences. And Fortis Healthcare opens higher after Hero Enterprises and Dabur's Berman family put in a combined bid, making it a three-way race for the hospital chain. And all eyes will be on Infosys as the tech giant kicks off the Nifty earnings season later today.
All right, let's first take a look at how the markets are faring at this hour. The benchmark indices building on to their opening gains. Both the Nifty and the Sensex are trading about 0.5% higher at this point in time. The Nifty is back above the 10,500 mark. In fact, both those benchmark indices are close to their 6-week highs now. The mid caps and the small cap indices are outperforming with larger gains of nearly 0.8% or a percent each in case of that small cap index. Real estate, healthcare, both are leading the sectoral indices, and overall the market breadth remains positive, for two stocks gaining for every single loser. Agam, any individual names that you want to highlight?
Sure. Well, we have Rupan Company, which is leading the Nifty 500, which advancing as much as 13% right now. And we are looking at gains in something like Chander fertilizers. In fact, a lot of fertilizer stocks are doing well in trade today as well. Indiabulls Ventures also up and about, up as much as 6%. And JBF Industries builds on gains that we've seen yesterday. But that said, Shraddha, what's trending today?
Agri-linked stocks are doing really well today. So fertilizer stocks, even if you pull up something like a Madras Fertilizers, a Chambal Fertilizers, Fact for that matter, all of them were trending about 5 to 6% higher the last time I checked. Not only that, even agri-linked stocks like Shakti Pumps, that Shakti Pumps is also seeing good gains of about 6% something like an Escorts, which depends on tractors, that has also touched a new high of 938 today. So some of these agri-linked stocks are faring very well. The other bit that is really doing well is some of the FMCG and consumption-linked names. So you see something like a Nestle, Britannia, both of them have continued to rise in the last few days, and today they have been both have made a fresh high. Even Westlife Development, that is catching up with Jubilant Foodworks. Shares of Westlife Development are now at over a 4-year high now, and not only that, they've risen 23% in April. So if I'm not wrong, it makes the best performing stock in April, at least in the consumer space for that matter. So again, don't know if consumption stocks are back in vogue, and also want to highlight two other stocks which have been hitting their daily circuit limits. First is Talwarkar's Value Fitness. It's the 12th consecutive lower circuit for that stock. And then you also have JBF Industries, 7th straight upper circuit as far as that counter is concerned as well. All right, let's also tell you what we have lined up for you on Trendspotting today. First, we will discuss the growth outlook for TCI Express's Managing Director Chander Agarwal. And then what to expect from Infosys in Q4. We will get an analyst view from Sanjeev Hota of Sharekhan. And all you need to know about the new riders in the race for Fortis. We will cover all of this in the next 30 minutes. All right, let's first put the spotlight on TCI Express. The stock has gained almost 27% in the last 1 year. It's currently trading with marginal gains. What are the company's growth and expansion plans? Let's ask the management. Joining us on the show now is Managing Director Chander Agarwal. Good morning, sir, and thank you very much for joining us here on Bloomberg Quint. Just want to start off by asking you about the fuel prices, the retail fuel prices, which are at an all-time high. What does that mean for margins for you? What kind of contraction could it mean, or do you intend to pass on that hike in fuel cost to customers?
Good morning. So basically, if you see last year, the fuel prices increased by almost 35%. In spite of that, we are seeing that the margins that we have achieved for last year is actually much higher than the year before, and that has always been our goal. And I think this has been possible because of passing on to the customer, although it is not that easy, but we've managed to do that. And at the same time, we have something called a diesel fuel surcharge, which is pretty much with all express players that they carry. So any sort of like a fluctuation in diesel fuel surcharge or diesel fuel price, that kind of impacts positively the surcharge that we are charging. So in all, I think we are able to pass on the price, the diesel fuel hikes very efficiently to the customers.
Chander, good morning. Having seen the e-way bill, implemented, are you looking at early benefits coming in? And if not, when can we start seeing these benefits, contributing in a meaningful way?
Right. So e-way bill is, just to clarify, it's nothing but just a permit, national permit that logistics providers needed, which was in a physical form earlier, and now it's in a electronic form. So companies which are not really like unorganized companies which are not really like computer savvy, or they're not having any like sort of IT infrastructure, or if they don't have IT infrastructure pan-India, supposedly if they're saying that they operate pan-India and they don't have that, then they will face a problem. We are already seeing that companies like unorganized companies are not able to keep up with the e-way, simple thing like e-way bill generation also. I mean, you need a robust IT system. So what's going to happen in time to come as we speak is that all that unorganized business will also start moving towards us, to organized companies like us. It's a matter of time. We can never really pinpoint like how it's going to happen and by when, but definitely it's going to happen.
Chander, we've seen multiple reports saying that e-commerce will drive revenue growth for the sector as a whole, but for your company, the revenue share from that area is low. So is that a conscious strategy, or is there intention to increase revenues from e-commerce?
Absolutely, it's our sincere effort to reduce, or rather keep it at growth level where we can maintain for the e-commerce businesses. Because operationally, it has never justified globally, let alone India, for having a decent profit margin, or even not even a decent profit margin, but a profit margin at all. So I don't think, as looking at my shareholders and my investors, I prefer that I remain profitable in a business segment that is on the growth anvil, and not just growing for the sake of like infusing cash from outside and burning that and not really having stellar profitable growth. So consciously we have kept the business low, and it is growing as per the demand of and our capability.
All right, Chander, question on surface logistics as well as air logistics, and I know that surface logistics obviously contributes to a bulk of your revenues. Can you give us an idea about the traction that you can expect going forward in comparison to air logistics, and how you are looking at air logistics develop eventually and perhaps contribute higher to your overall revenues pie?
So India is going to be a road economy. It's not going to be something which is going to move to air cargo or something. Now with the new highways being built and everything, with the GST in, with the e-way bill in, I don't think the time it takes from Delhi to Bombay by road, like say about 48 hours or something, is going to take like, it's not going to increase further. It's definitely going to decrease. So if it's going to decrease, it's going to pose a big threat to air cargo companies. Even like in the hinterlands of India, the road network is more stronger to kind of like connect the big cities and the medium cities, and as much as the air cargo, the air network. Now the government is talking about building 100 new airports and all that, but it's something which will take time. And in that meantime, the economy is going to set to grow at about 8% or something, 7.5 to 8%. All that demand that is generated, even in those small locations, is going to be catered by a road network. So I think surface road network in India is going to be something of a business to reckon with. all the investments that is also happening in India in infrastructure is happening primarily in the road segment. If you look at the Niti Aayog plans, about close to, I would say about 2 lakh crore rupees is going into road infrastructure development. And that is something not even in the rail, well, the rail is happening towards the corridor, but not so much even at the airports. The airports have just been announced now. So I think the road transportation business is a very good and strong future.
On the margin front, they have more or less remained range bound between that 9 to 11% sort of levels. Is there scope? Do you believe there's scope for margins to expand from these levels? And if yes, where do those levers lie?
So we are looking at close to about 15% EBITDA margins in in a year or two in going forward. What happens is in our express business, the profitability doubles on the growth level. So let's say if I had a 20% growth level last year, my profitability, my net margin would be at about close to 40% increase. Similarly, if this year if I have a 25% growth level in top line, my margins would go about by 50%. So saying that, definitely, I mean, we've increased our margins from 8 to 11, and I think going forward, it's going to be like 12 to 13, and hence onwards is going to be 15. So there is something which is definitely in our plans, in our long-term plans.
Okay, Chander, final question from my side, of course, is that are you looking at other logistics areas or businesses you are not currently present in? For example, something like cold chain solutions or pharmaceuticals. In what areas would they be then if you are looking at some of these opportunities?
So express industry in India, it's an untapped business. If you look at the road network, road market, the infrastructure cost, the logistics cost in India is about 13%. And the road is about 60% of that infrastructure cost, which is close to about, if you have a $2 trillion economy, it's about $300 billion is what the market size is of the road network itself. So saying that, I think this business itself has a lot of propensity to grow in the years to come, and it is also the most profitable business and sustainable profitable business long term in the Indian logistics sector. Now if you look at cold chain, definitely it's something which the government is talking about, but it is not even close to the profitability is like one of the lowest in the industry, I would say, because it is so capital intensive. When you have something capital intensive with poor infrastructure, the costs are going to be very, very high to operate. And saying that, I don't see that cold chain is going to be somewhere on our anvil. However, we have started doing the cold chain box movement by air, which is an unusual business which is happening in very small scale. And as the government kind of like laxes on all these products to be imported on the taxes, I think this business will grow for us. In pharmaceuticals, we're already doing close to about 5% of our entire spectrum of business of a vertical, and I think this is set to grow. Definitely, there's not going to be a cold chain element to it, but regular transportation itself will suffice for its high growth.
All right, Chander, thank you very much for joining us with your perspective on what lies ahead for the company. With that, we are going to move on to Infosys, where there's a lot riding on the company today. The tech giant, of course, will set the mood for the fourth quarter earnings season when it comes out with its numbers later today. It's also the first quarter under a new CEO, Salil Parekh. Agam, who tracks the counter very closely, is here to tell us what to expect from the company this time around, Agam.
Sure, Shraddha. So as I've been mentioning, it's not going to be so much about what the numbers are for the quarter as much as it's going to be about the outlook. But that said, let me just address what the Bloomberg estimates and the Bloomberg consensus is throwing up with in terms of expectations. And as you can see here, we're expecting about near 2% increase on a quarter-on-quarter basis when it comes to your dollar revenues as well as in rupee terms. Coming down to your operating margins, we're expecting it to marginally move up by as much as 24 0.4%. Moving in when it comes to profitability, well, prima facie, we're expecting a big drop, but this is largely on account of a tax reversal that the company, recorded in the base quarter, because of which they had recorded a very high profit. This was after they had, signed a deal with the US IRS, and that's the reason why, on the face of it, we could look at a decline of as much as 28% on a sequential basis when it comes to its profitability. But on the whole, we're expecting, a good quarter when it comes to its bottom line. About a bunch of factors that we are watching out for. The first one, of course, will be the FY19 guidance. Now, the Bloomberg Quint poll is suggesting it could be a 200 basis points, growth for its revenues in constant currency terms within a range of 5 to 8.5%. And as far as margins are concerned, that could come anywhere between 23 to 25%. Of course, the second and perhaps the more important factor is Salil Parekh telling us about how his plans for Infosys, and perhaps give us a better idea of strategy. Do remember that we will have a proper layout in terms of Infosys strategy on the 23rd of April. But for now, we could at least start getting some indications as to how Salil Parekh intends to take Infosys forward. And of course, finally, how the verticals are doing, commentary on verticals such as BFSI, where Infosys has the largest exposure, and something like retail as well as manufacturing, which have been relatively volatile for the entire sector as a whole. So these are some of the factors that we are watching out for. And to take this conversation forward, let's get in an analyst view, someone who tracks this counter very closely. We have Sanjeev Hota, Assistant Vice President for Research at Sharekhan, joining us. Sanjeev, good morning. Thanks for joining us. Let me start off with what your expectations are of when it comes to Infosys. We are expecting an uptick of as much as 2%, but that's what the consensus is throwing up. What are you tracking, and what is your expectation with respect to growth for Infosys this quarter?
Hi, good morning. I'm expecting also that broadly what the state is expecting, 0.8% kind of constant currency revenue growth and 1.8% kind of reported growth, added by 100 basis points from the cross currency tailwind. And margin is expected to be around 24% owing to absence of wage hike. And bottom line, I'm expecting a 0.8% Q-on-Q fall. We are not taking the tax reversal last quarter, so on an adjusted basis, I'm taking 0.8% Q-on-Q fall in the net profitability. But as you rightly said, numbers is now passive for Infosys. What is we are looking forward for is the guidance and the management commentary for the FY19 and a strategic roadmap from Salil Parekh for the road ahead in the new software, and what the strategic shift is taking from Dr. Sikka, that Dr. Sikka and research for Infosys for next 5 years. So that are the commentary I would like to hear from the management, and key numbers will be the guidance, what the variable the management taking for guiding. I'm a bit on the optimistic side, and I'm expecting 7 to 9% of the guidance, which is higher of the street, what the street is expecting.
Sanjeev, if I may interrupt, before we talk about the outlook, let's just finish addressing the expectations for the quarter. And by that, I mean, could you give us an idea of how you're expecting some of these key verticals to pan out for Infosys? And again, I do not want to talk about the outlook just yet, because a lot of that will also depend on how, Salil Parekh wants to take the company forward. But just for this quarter, and perhaps in terms of you expect the next 1 or 2 quarters to be with respect to its largest verticals, what's going on here, and what is the digital side of operations, and what role does that have to play for Infosys right now?
Yeah, for digital, it's still around 20 to 24% kind of revenue. So even if it's going to grow double digits, the needle will not move much. So main factor that is going to drive the growth going forward for Infosys is the BFS. And if you see that there's a contradictory view coming from Infi and TCS, Infi is quite optimistic on BFS recovery in FY19, whereas TCS is quite not very optimistic on VFS recovery. So we need to check what is happening on the VFS vertical. If VFS vertical is going to revive, definitely we'll see a first half of FY19 will be strong for Infosys, and given that it's a seasonally strong quarter for the entire sector, so definitely if BFS is going to revive, we'll see a better first half from Infosys. But what has happened is that if we are seeing tailwinds in the BFS sector, but it's not translating into the revenue because of the captive shift and insourcing. So how that is going to impacting the entire trajectory for BFS, that need to be checked from the management.
Right. Sanjeev, but at least as far as this quarter is concerned, what kind of dollar revenue growth do you think can actually disappoint the street? What kind of numbers would really be disappointing, given that the shares have run up about 4-5% in April itself?
I think more the dollar revenue growth, if anything comes below 1% on a constant currency basis, or 0.8, 0.5% below that, numbers is definitely going to disappoint. But I don't really think the dollar revenue itself is going to disappoint the street. What is going to matter is the guidance for FY19. That number everyone is watching out for. If you see last 6 months, Infosys already run up 25%. That is a huge outperformance to the broader market. So people are already building a very optimistic numbers for FY19. If the guidance is not up to the mark, definitely stock is going to react negatively. So what matters now is the guidance.
So what is that one key parameter, whether quantitative or qualitative, that you're going to be watching out for, and that could move the needle with respect to what happened or how Q4 played out? Salil Parekh's strategy is, of course, going to be another thing to watch out for.
I think for the entire sector and for Infosys also, BFS recovery is going to be the key monitorable I would watch out for.
Sanjeev, my question with regards to Infosys is that, as and how there is less focus on your traditional businesses, there is also this understanding that the deal sizes may become smaller or at least volatile. Some deal sizes may be very large in terms of the digital space and the kind of trends where you're tracking. The question really is that what is it that Infosys can start doing now that could, provide some impetus with respect to its earnings based on the trends that you are tracking in not just the US and European markets, but across the globe and all the markets that Infosys is present in?
I think Dr. Sikka has already set up a base for Infosys, the strategic roadmap for Infosys. So now it's up to the new management how they are going to execute that strategy. So a new software like Scava, Pania, Nia is already there. The digital shift is already happening in Infosys. They are hiring good numbers in US. So everything in place. So now it's up to the management to how to execute. And more than that, if the environment is not going to be conducive for verticals such as retail and BFS, it's not in the management hand to outperform the industry growth. So it's all depend on all these factors, because the BFS, retail, manufacturing play a bigger part in the secular revival of the sector. If it's not going to be there, even if the setup in place, it's very difficult for the company to grow or outperform the broader industry. So I believe the setup is already there. So how the new management is taking the roadmap ahead need to be checked.
All right, Sanjeev, thank you very much for joining us here on Bloomberg Quint with what to expect from Infosys earnings later today. Pleasure talking to you. But with that, we will move on to our special segment, the Bloomberg Edge, where Yash Upadhyay will tell us about a pattern that the Bloomberg terminal has thrown up. Yash, what's on your radar today?
Good morning, Shraddha. A lot of green on the markets today. The Sensex is up about 0.5%, and with that, it is on course to gaining for a 7th consecutive day. Now, this is its longest winning streak in the year of 2018. The last time it managed to be on such a spectacular run was back in November 2017, when it had gained for the last 8 consecutive trading sessions. So what's pulling the index higher? Well, it's the banking and the IT stocks. Banks today being the ones in charge. 3 out of the top 5 gainers are banks, namely Kotak Mahindra Bank, ICICI Bank and HDFC Bank. All 3 gain, adding close to 70 points on the index, which is approximately 40 to 44% of the total move that we are seeing today. Back to you.
Okay, thanks a lot for that, Yash. Of course, we'll keep tracking those cues from there, but we've run out of time on this show, so it's a wrap on this edition of Trend Spotting, but don't go anywhere. Up next is Hot Money with Darshan Mehta.